Hi, I've got Jeff Clark with me, and he's got some frequently asked questions, some emails from some of our viewers. So, Jeff, take it away.
Hi, Mike. It's great to be back with you. And yes, we get a lot of questions here at Gold Silver, as you can imagine. Here's another one that's a frequently asked question, and that is this. If gold and silver prices really do go parabolic, as you think they will, and their ratios to the Dow and real estate get real low, will you sell all of your gold and silver holdings, Mike?
First of all, I have talked about this many times. Anybody that says that they can nail the peak, that they can get you right out on the peak of this, it goes parabolic and then, it starts its pullback. If they say they can nail that peak, they're lying. And if they do, it was just dumb luck. That's the first thing. What I plan on doing is trying to keep emotion out of it. That's the number one nemesis of investors is emotion. You have to control your own emotions. And so one thing that I'm doing for my insiders, and I've said this for years, we're building this dashboard that measures the Dow gold ratio, the gold silver ratio as a confirming indicator. Like, for instance, there should come a day where the Dow gold ratio, where gold's value is like 50% of what the points on the Dow is. But you don't want to start selling until the gold silver ratio is under 20. So when those two things line up, you sell a portion of your position. I really do have a feeling that this time you're going to see the Dow gold ratio go to like 0.5. In other words, the price of gold will be double the points on the Dow. Right now, it's at like 14 or 18, somewhere in that range. I haven't checked it today. But what I plan on doing when a whole bunch of factors, and I have 21 different indicators that I've come up with over the years, and I'm keeping a lot of them secret because Richard Russell used to have his primary trend indicator, and he wouldn't let anybody know what it was, and it was right most of the time. Because he said, if you let everybody know what it is, it stops working. If everybody starts trading this thing all together, it stops working. So we're going to develop these that use a set of fundamental indicators, a set of indicators as far as the environment goes, negative interest rates and stuff like that, a set of indicators that are confirming indicators. And then what I plan on doing is figuring out what percentage of my portfolio I'm going to sell in tranches. And what I plan on doing, it could be anywhere from 20% to 33% of my portfolio that I sell. But then when I sell again, I'm going to be selling the same percentage of the remainder. So you never actually get down to zero. That question, will I sell all when it reaches, and go into the next asset class? No, I'm always going to have some gold and silver left because I plan, as this goes up into this bubble, trying to capture around that peak through these indicators and not letting emotion get me out too early or too late.
But you will sell enough to take advantage of the wealth transfer, I assume, right? That's how we're going to participate in this process of selling very overvalued gold and silver, right? And buying
Absolutely.
undervalued assets.
Well, let's say you just to make the math simple, let's say I was going to sell 50% of my portfolio with each tranche. If I sell 50% when an indicator reaches a certain level, and then the price continues to run away and it doubles, I sell, and now my portfolio is right back to where it was as far as the dollar value goes, and I sell another 50, not the dollar value, the value against other things, because we're measuring ratios. And I sell another 50%, and then it continues to run and it doubles again, and I sell another. It keeps me from getting out way too early and regretting my sales. I might say, well, if I had not sold that first one, I could have had this much more. But nobody knows the future, and you got to come up with some logical plan. This is the most logical that I can think of, is to try and make something that gets me out that doesn't get me out completely too early, but gets me out enough before it's too late.
Yeah, good point. Right. And I think we should highlight that point that you're actually going to sell in tranches, kind of like we're buying in tranches now, right? We're accumulating. We don't know where the bottom is today, nor will we know where the top is then. So we're buying in tranches and we'll be selling in tranches. So it's probably a good idea to get used to buying in tranches now, is it not?
Yes, and we're going through this pullback that I've been hoping for and expecting. I've been watching commitment of traders and a few other things, and saying, with the, we sold. There's a lot of gold and silver that was bought and sold at a certain price level, and we hit 2,000, and we're bouncing up and down in this 2,000 range, and it sort of exhausted itself. If you look at the number of ounces that are being accumulated in identifiable above ground stockpiles, such as ETFs, the inflows and outflows. The inflows were tremendous, and then they've slowed down. And then the commercial shorts on the commitment of traders have picked up a little bit, suggesting a pullback. I'll be doing some charting again today because we've fallen a little bit further. There are some support zones down here, and there are some that are very strong. And so I'm going to be spending more than my normal allocation because I do have a little bit of excess cash right now. So there's a couple of tranches that I'm going to be buying at. Our insiders get all of this information, the people that have purchased a certain amount of metals from goldsilver.com. So they'll learn what I'm doing just after I do it.
Very good. And
yes, everything in tranches, going in tranches, dollar cost averaging in, and going out in tranches. And beyond just dollar cost averaging, when I think it's run too much, I sort of reduce my purchases. And then when it falls, I try to increase my purchases. I just, everybody has an I wish. And I wish during March, when there was that big pullback and the gold silver ratio went to over 120, I just wish I had some excess cash on the side, and I didn't. I really wanted to buy some silver during that period of time.
Well, I was fortunate enough to have some cash, and I did buy twice during the month of March, and that was very good. And even though gold and silver pulled back now, silver's basically still doubled from the price I paid back in March. So big corrections are big opportunities for us at this point in the bull market. Someday we'll be selling, but that's not today. We're still buying and accumulating now. So
yeah.
Well, Mike, thank you. This was a very informative video. Thanks for joining me, and I will see you on the next frequently asked question.
Thank you.